I've got something to show you today that's going to blow your effing mind. One chart, one shocking truth, and one clear signal that the next big Bitcoin breakout is imminent. This chart shared by Charles Edwards from Caprioli Investments, it isn't just interesting. It's a sign of what's to come next. It's nailed Bitcoin's previous breakouts, and guess what? Just flashed green again. And it sounds a lot like the money printer is currently being fired up and set to full send mode, especially for risk assets. We're talking about US liquidity, global liquidity, and the domino effect that it could all have on financial markets in the coming months and even years potentially, because everything is downstream from liquidity. You want your assets to go up, you need more money in the system. This chart is signaling a ginormous wave of liquidity is about to flood into the markets, and that when that happens, if history rhymes, prices are going to go way higher. Now let's dive deeper into the chart. So feast your eyes on this beauty. What we're looking at here is a chart of Bitcoin's price alongside year-over-year changes in US liquidity. The green shaded zones are when liquidity is growing. And every time US liquidity grows, Bitcoin takes off. In 2020, the Fed injected over $3 trillion in stimulus. Bitcoin's price exploded 600% from around 10K to 67K in 2021. In 2022, liquidity dried up and a brutal bear market began. Those were fun times in case you weren't around. Bitcoin crashed down to $16,000 in 2023. Bitcoin's price recovered and jumped 180% over 7 months during the last US liquidity expansion. In 2025, global M2 has been hitting new all-time highs, even though it's currently pulling back a little bit. But what's interesting now is that the US money supply specifically is back into growth mode. Despite quantitative tightening and the lack of rate cuts, the money is increasing. You can see it on this chart. A liquidity regime shift is underway from the biggest economy in the world. It's worth paying attention to, which makes this a big deal for financial markets. When the line goes green, markets go risk on like crazy. The source of that liquidity is about to come from every direction, by the way. The Federal Reserve will eventually cut rates. The Treasury, they're issuing a tsunami of new debt. The reverse repo program is draining, meaning that money is moving back into the markets. More fuel, more fire, and Bitcoin probably explodes higher in that environment. Let's zoom in on what's happening right now. Just this week, the US Treasury announced $1.6 trillion in new debt issuance over the next 2 quarters. That's an insane amount of money. Now, before we get into exactly what this means, if you are trading the cryptocurrency markets, then guess what? You need a good exchange to trade on. That place is called BitUnix, where I'm doing most of my futures trading. It is a no KYC, no VPN, available to anyone, anywhere exchange. That means you can trade there. They got deep liquidity for all the big coins. If you want to trade Solana, Ethereum, Bitcoin, you want to trade more exotic stuff like dog coins and penguin coins, they got you covered. And right now, they're offering you their most crazy deal ever. Use the link down below. This is exclusive. Using that link. 30% fee discount with VIP level 3 trial straight away. $400 deposit bonus. Deposit $2,000, you get $400 cash back, and trading bonuses up to $8,000 cash back plus 3 Ethereum bonus on top of that. 3 ETH worth almost $12,000. This is an insane deal. It's a limited time offer. There's a link down below. Go sign up now and check it out. Okay, so $1.6 trillion. That's a massive injection of liquidity. But here's the thing. $500 billion of that is being used to refill the Treasury general account. So yes, some of that liquidity is temporarily being parked, but they are very, very open to draining the Treasury general account when they need to. But net liquidity is still growing, but it might chop short term. That's your volatility warning. And here's the wild part. Even without this latest $1.6 trillion, it's a crazy amount of money. US spending was already locked in. As Lynn Alden points out, the biggest buckets in the federal budget right now are interest payments, Social Security, Medicare, defense, all of which are basically untouchable. So yeah, Elon Musk's Doge talked a big game, but you can't stop this train. He couldn't make a dent in spending cuts. And anytime he looked at any of the sacred cows, well, he was told no. The Fed, once again, of course, at the recent meeting kept interest rates unchanged for July at 4.25 to 4.5%. But don't let the headlines fool you. The real action is happening under the hood. You see, 2 Fed members were pushing for a cut. That's a crack in the wall. And the Fed is quietly keeping the standing repo facility wide open with a $500 billion cap. That's the stealth liquidity hose. Okay, there's a lot of ways they're putting money in the market without doing QE, right? So while Powell is publicly hawkish, he's privately dovish because in reality, money printer go burr is structural and inevitable. It's the only way the modern central bank experiment survives. Nothing stops this train. Meanwhile, the bond market is pricing in 2 more rate cuts this year and 3 more in 2026. That would take the Fed funds rate all the way down to around 3%. Of course, Donald Trump is pushing for even lower rates. When he puts in a new Fed chair next year, it'll be somebody who's kind of a puppet for his will and will get even lower rates likely. Bitcoin in this scenario could absolutely rip because crypto moves first. It's the canary in the macro coal mine. Now, here's something most people aren't even watching. Well, the West is focused on rate cuts or lack thereof. Credit is absolutely exploding in places like China. And I'm sorry, second biggest economy in the world. What China does matters big time. And China is doing what they do best, stealth easing. They're not cutting rates or making QE headlines. Instead, China is quietly pumping money into the system. They're propping up their economy by doing stuff like letting local governments and big state-run companies to be able to borrow and to spend more. And as macro analyst Andreas Steno Larson just confirmed, Chinese bond issuance has spiked super hard. Historically, this kind of move leads global liquidity data by around 2 months. That means global liquidity is continuing to rise beneath the surface, and that risk assets like Bitcoin, emerging markets, commodities, and yes, dog coins could start catching a bid now, even before the data shows up in the global M2 charts. With the world's largest economies right now easing at the same time through a variety of different policies, this means the global financial system right now is getting flooded with cash. And usually in those scenarios, risk assets rise. There's no guarantees in markets. Obviously, this time could be different, but you're making a very contrarian bet that all the money flooding the system will not raise asset prices. And yeah, China does have tight capital controls, which keeps a lot of its liquidity within its borders. But here's the thing, their credit expansion still sends shockwaves globally. Remember, it was China's reversal in monetary policies that got us out of the monetary slump, the liquidity slump in late 2022. They started first. China fuels demand for raw materials, boosts trade with Asia, signals risk on to global investors. Liquidity doesn't have to physically move to matter. It just has to shift sentiment enough to matter. And right now that sentiment is turning extremely bullish. Historically, when the US liquidity growth flips positive, which it has done, it tends to kick off a multi-month expansion cycle for Bitcoin. With the USA finally back in the game, liquidity-wise, regulation-wise, crypto-wise, all kinds of stuff, we could be entering an acceleration phase in the market, which could carry this bull run well into 2026, depending on how long they keep the liquidity being injected into the system, how long the money printers go burr, essentially. And this time, the setup might even be stronger than the last time. We've got rate cuts coming eventually. I know Jerome Powell has been stubborn, but at some point they will have to do it. And it'll be calm hikes, hopefully, instead of emergency hikes. You don't want emergency hikes or cuts. Those are the scary ones. You want calm cuts. We've got Bitcoin ETFs gobbling up supply. We've got institutions scaling in, not out. We have treasury companies. We've got potential tax cuts coming from the Trump administration. GDP's growing at 3% in the last quarter. All the good stuff's happening. This isn't retail-driven FOMO pushing markets right now. This is smart money still positioning. This is Wall Street entering the game in a massive way. And on-chain signals are looking more bullish than ever. Exchange supply is down. Stablecoin issuance is rising. In fact, the Genius Act is going to allow literally trillions in stablecoins to come on-chain, which is massive liquidity to pump all your dog coins. Bitcoin's being taken off exchanges. It's getting nuts. Everything is pointing to higher prices. The pivot is here. The global liquidity floodgates are opening. That's it. Thanks for watching.